Hey everyone, Couch Investor here with another video for you today. Now this will be our second part of the casino stock series. A couple of days ago we talked about MGM and why I think it's a reasonable stock to pick up right now. Went over the balance sheet as always, some articles and then my personal opinion. Now today we're going to talk about Wynn. I know it was a popular stock from most of you. And then our last one will be probably over the weekend, will be about Las Vegas Sands. But yeah, yesterday I uploaded a video in between the series just regarding the 5 stocks I wished I had picked up during the crash. If you haven't seen that video, go check that out right here or right there. It's just me talking about those 5 stocks. And why I wanted to buy them and why I didn't. There's no negative or positive, it's just, again, my personal opinion. So, again, I also would like to thank everyone that's watching, subscribing, and liking the videos. If you haven't subscribed, hit that subscribe button. And if you want to get notified when I upload my videos, hit that notification bell. Let's jump into it. So today's stock is Wynn Resorts, ticker symbol WYNN, just like the name. Trade at around $70, down 2.5% today. Now year to date, the stock was as high as $152, went all the way down 71% on the downside to $43. So now it's at a 62% in the greens since its lowest point. We can see a small double bottom actually, almost, in a period of what I would say two weeks. So that's a bit reassuring. Obviously, if it goes back down to 48, 47, then there might be some more downside. But in my opinion, I don't think it's going to go back down to its lowest point. And if it does, maybe you should pick it up. Who knows? All right. Before I go over the balance sheets, again, like in my last video, I think I'm going to continue doing that. I will put the timestamps down in the comments below. So if the balance sheets or the introduction or the articles or my personal opinion does not really interest you in this video particular, you could just jump and skip through the part you don't want to watch, and that way, like, I'm not wasting your time, you're not wasting your time, and everybody's happy. And yeah, that's it. Timestamps will be down in the comments below. Now let's get into the balance sheet. Like I said, ticker symbol WNN. Price 69.70. I think it's updating automatically. Good thing. Google Sheets, you can put a formula, Google Finance, and then like Nasdaq or New York Stock Exchange or whatever. Ticker symbol, comma, price, and then it updates automatically when you refresh the page. PE ratio very high, 60. Dividend yield, they upped it by, I think it was 75 cents per share. Now it's $1, so it's not bad. Average PE 35. 5-year average PE is 35. Now the PE is 60, a bit high, but understandably with the price, and you will see the earnings. Last earnings were missed. All-time high 151, 152. So let's start here. Cash $2.3 billion, revenue $6.6 billion. Now cost of revenue for me, it looks a bit high. It's like 75% of the revenue. The cost of revenue is $4 billion. The gross profit of only $2.5 billion. A bit, I don't know. Total operating expenses $1.6 billion. Operating income $1.65. Assets, cash, receivable 346 million, inventories 88 million, prepaid expenses 69 million, which is a total of $2.85 billion cash and assets. All right, I had to correct something on the balance sheet. Now it seems more clear. So non-cash assets, property 14.5 billion. Before I had 10 billion as property, but it's altogether 10 billion, depreciation 4.5. So the net is 10 billion, intangible assets 146 million. Other, again, all more in detail stuff, you can go on Yahoo Finance or investing.com. We come at a total of $11 billion non-cash assets. Liabilities, short-term or current, they call it. Non-current is long-term. So short-term, 1.98 billion. Long-term, much more, 10.34 billion. Is a total of $12.32 billion. Very high margins here. 38.5% gross margin and a 13.6% operating margin. Now liability breakdown, that's always the current liability, the short term. So that's 323 million. Accounts payable 262 million. Accrued liabilities 224 million. Deferred revenue $824 million. That's still revenue that they have to collect, which is a total of $1.98 billion. Stock repurchasing, not so high, 66 million dollars, that is. Last year's earnings per share was almost $1, 98 cents. Obviously, it was a miss. They have 107 million shares outstanding, so not that many shares. This year, their projected earnings per share for fiscal 2020 is only 5 cents. I said dividend payments per year is $4. Current valuation 7.5 billion. The earnings, that was last quarter's earnings, 123 million, so not a lot at all. Value versus previous earnings, so that's a total return on investment in 60 years, like the PE ratio. Current reflection of earnings is 214 million. So if you see, it's higher than the actual last earnings. And then I've added this because I think this is very important. Stockholder equity. I put this in orange because the year before that, you could have had a stockholder equity. It was at, I think, a bit over $2 billion. Now you want the stockholders' equity to be on the rise every year. That means you get more value out of the company, out of your investment. Now, I think last year was a bad year for all casinos because with regulations and lots of things happening in the world. Obviously, this year is going to be horrible as well, but that's why I think Wynn, Las Vegas Sands was also in decline, probably MGM as well. So you want to look for stockholders' equity. If it's growing every year, perfect. If not, then find the reasons why it's not growing, because you want your money to be more valuable every year. You want to have a bigger piece of the pie. Now let's go look at some articles, shall we? First one, also important thing to know. Wynn has casinos in the States, in Las Vegas, and in Macau. Macau is the Las Vegas of China. Wynn says Macau operations in the red for time being. That was, I think, a week ago. Obviously, since it's in China, it closed before the ones that were closed in Las Vegas. So here, the Wynn Group said in February that during the closure period, it incurred approximately $2.5 million per day of cash operating expenses. It's meaning they are bleeding $2.5 million per day, excluding cash interest expense of approximately $500,000 per day. Now, some good news. March 20th, our casinos operations were fully restored. However, certain health safeguards, such as limiting the number of seats per table, slot machine spacing, temperature checks, mask protection, and health declaration, remain in effect at the present time. So obviously, you're not going to have a poker table with 10 players. You're probably going to have only 5, or I don't know what the rules are, but they might have opened again. I'm not sure if it's still open, because I know there are new cases in China coming out that we know of. So I'm not sure how that works, but the fact that they reopened the operation might be a good thing in the longer term. but in Vegas they are still closed. Again, if you want to read the whole article, all the articles will be down in the comments below. Now here are some reasons why Wynn is a buy. Lots of technicals aspects here. They talk about the fact that it has risen in the last couple of years, then now just a sudden drop. Earnings per share weren't as low as expected or high as expected. Overall, very technical article, but a bullish, let's say, bullish article that in the long run they might be a very good play to pick up right now, especially if you think it's at a reasonable price. Another good article, positive article, Wynn Resort stock is a buy on any dip. Again, I'm not going to read through everything, but I'm just going to take this one because I think this is important. A reassuring bond offering. So because they will need some cash to pay, well, we just seen that they are bleeding $2.5 million per day. So I'll read you this. Initially, Wynn was only planning to raise something in the neighborhood of $300 million in new bonds. Given the high demand for Wynn's offering, they were able to massively increase the size of the deal. Wynn managed to pull in $600 million at a not too bad interest rate of 7.8%. So almost double. Best of all, the debt won't be due until 2025. By then, the economy should be well into strong growth cycle again. Well, we all hope so. Keep in mind that other struggling companies have had to pay much more for that, like Carnival Cruises. Obviously, they had to pay 11% per year, approximately. Obviously, because they're like a cruise line, it's not on land, so it's more risky. Casinos make more money than cruise lines, hotels, airlines, and everybody combined. It's crazy, and that's not one casino, it's just the casino industry. Then JP Morgan remains very, very bullish. They kept their outperform rating on Wynn. So very positive article. If you want, last thing, only the strong will survive. What do they mean by that? Gaming companies, casino companies like Eldorado Resorts and Penn National. I pull up Penn National right here. As you can see, it went for around 37, 38 bucks before the crash. It crashed almost 90% to $4.5. Then if you bought the at the lowest, you could have made almost more than 200% in a month or so. But again, they say here, look, you could make some money, but they're truly lottery tickets and they might not be here if things turn to the worse. Now we go again to this same article as last video, and this will be the last article for this video. Wynn Resorts, like next door rival Las Vegas Sands, this will be our next video. Wynn stocks faces the double whammy, well, because they are in Las Vegas and in Macau. Obviously in Macau they are opened again, not fully. So should investor consider this a contrarian buy? In my opinion, I would say maybe yes, but let's see what they have to say. It depends, like LVS. Wynn could see an epic rebound if both Macau and Las Vegas tourism return to normal. Obviously, I don't see that happening until maybe the summer or even after the summer. Because until we have a vaccine, I don't think tourism can return to normal because, well, we'll just start the whole cycle again. But you know, if by August or something we can get back to the way things were before, most of the population had already the coronavirus or whatever, I think they still have 6 months until end of the year, 5 months. It could boost their balance sheets, their profits, their revenue especially. So yeah, but overall, I think casino stocks, the one MGM is my number one pick for casino stocks. We talked about this in my last video. And the reason is, well, first of all, it's not just casinos, it's events, boxing events, UFC, concerts, magician shows, whatever. They have different revenue streams that do not necessarily aren't necessarily linked to the gambling world industry, and they own 50% of City Center in Vegas, which is huge, which is all the area resorts and hotels and casinos. Wynn, again, is huge. It's some people only like hear about Vegas. They're like, oh, Caesar Palace, the Venetian, Bellagio, whatever. But Wynn, trust me, it's huge. I've been there. Again, in China and in Vegas, I think when things will go back to normal, their balance sheets will rise. So for me, that's why it's my number 2 casino stocks. And in my next video, I will explain why Las Vegas Sands is my third choice. Again, thank you all for watching. Thank you all that have subscribed. If you haven't subscribed, we really appreciate it if you can hit that subscribe button. We want to reach 100 subscribers by the end of the month. Hopefully we can do it. And I hope to see you all in my next video. Bye bye.